But let's welcome on board Sanjiv Bhasin as well and talk about what he's making of the market right now. Sanjiv, let's pick up on the point of, chemicals and agrochemicals as a segment right now, because there's been quite a bit of correction as well that's played out ever since some of the global majors did cut their guidance. You think this is a space which could be bought now?
Yeah, good morning. So, Aisha, you have to be stock specific, and we've had SRF and RT under our coverage, which we think are going to be key beneficiaries. SRF is the largest player in fluorochemical. It has a direct tie-up with the likes of Bayer, and their other businesses, particularly nylon cord tire and other verticals, are doing extremely well. So we are very, very bullish on SRF and RT. This news on PI industry, I think there will be some time before it gets digested. But overall, the industry seems to have bottomed out. And if there is going to be progress on the China front in other avenues of destocking being over, then I think this industry on the back of a laggard in the last 6 months can come out to be an outperformer. So stock specific, as a disclosure, both SRF and RT are in our portfolios, and we are extremely bullish on them in the slightly longer term.
Okay, fair enough. That's the view coming in on that entire basket. What about your outlook then, Sanjiv, when it comes to the entire crude oil linked stocks? So what about, the ONGCs of the world, Reliance Industries, and some of the oil marketing companies as well?
Yeah, good morning. So oil marketing have been on a tear. I mean, when did you see 30 to 60% gains in a month in IOC, HPCL, BPCL? And I still think there is more steam over there. Also, don't forget the auto stocks on a sentimental basis will do well. So we are very, very optimistic on the oil refining and oil marketing companies. Reliance has been more of a laggard, but I think that will catch up. And the whole basket of crude underperformance will see a large part of the ingredient users do very well. Paints, tires, even auto. I mean, Maruti will be a key beneficiary. Maruti plant is very near my office. Recently, I just had an interaction, and they said this going away of the Haryana workforce problem is being a big, obstacle which has got removed. If you are aware, the Haryana had put up embargo on outside labor coming into work. So they said that was a very big boon, and their supply chain is doing extremely well. So as a corollary, weak oil prices or the correlate of that, I would say Maruti is definitely headed to 12,000. IOC, HP are both in our portfolios, and we are very, very optimistic on the oil marketing companies gaining another 20% from here.
Okay, Sanjiv, what's the outlook then when it comes to ITC, given that it was the first in-person analyst meet and it was pretty confident, talking about the company becoming future-ready, rural demand, a stable tax regime as well in cigarettes business is what was expected. How have you read into the movement of an ITC? What does an investor do at 453 levels?
So I think, now the pattern has changed, and that is in the last 1 year, it is evident. From 220, ITC moved to 450, and at the cost of some of the large cap players like a Lever. I still think ITC is going to outperform Lever on a multiple. It still trades cheaper than that. And given that now they are exuding confidence on volumes being back, you are aware, all your Starbucks is... the paper is the cups which you drink are processed by ITC Bhadrachalam. ITC Hotels, which is just 10%, is seeing chock-a-block revenues on their hotel. They have 7,000 rooms over there. And all the other businesses from agarbatti to matches, ITC is part of your everyday life. So I think that consolidation has been key. And now you could see this stock actually outbeat at least Lever in the near term.
The valuation between HUL and ITC and Nestle and ITC and Marico and ITC and Tata Consumer, I think it's very, very stark. Now, there are two FMCG companies which are giving you positive outlook for next couple of years. One is ITC. Imagine cigarette volumes have gone back to 96% of FY13, and from FY13 the decline in the cigarette volume had started. They've gone back to 96%. And when a business which is a cash cow business, which is, a return on equity and return on capital, which are really north of 50%, if that business comes back, then operating leverage is going to be huge. Second, they're talking about FMCG business expanding margins every year. And third, like, Bhasin Saab said, You've got Bhadrachalam, which is ITC, the paperboard business and also the hotel business. They are really firing full cylinders, and it is still trading at 26 times FY25, much cheaper than other companies. Tata Consumer is the other company where they're talking about, uptick in return ratios, marked improvement in their profitability, but it's trading at 70 times or 60 times 1 year forward, depending on the estimate you're looking at. So just one of those stocks which in a sense is still cheap and I think has consolidated enough. And we've discussed exactly the same point. What do we have on Mahindra & Mahindra to acquire 60% stake? Gone. Look at it again. 60 points high meanwhile for SGX.
They're going to acquire 60% stake in Emergent Solrin from Mahindra Holdings, and this is going to be for a sum of about 288 crore rupees. That's the news that's come in, and it's a non-government company, just fine. It's a wholly owned subsidiary, by the way, Emergent Solrin of Mahindra Holdings.
Yeah, so just, a little bit of corporate adjustment here and there. Bhasin Saab, what makes you bullish on OMCs? Is it the decline in crude or pure valuations?
No, both pure decline in crude, pure valuations, and Nikunj, they're refining their processing of both hard and soft crude, and the Russian discount, which has made them the numbers be very, very strong. I still think that given you are looking at look at the car sales and so on, and the fuel sales have been humongous. So I still think there is enough room on the upside, given that valuations have been so compressed over the last 3, 4, 5 years, and this is the first time they are coming off their own. So which is why we always thought HAL and BL have topped out or doubled, but the volumes and the growth have been so stupendous, and now their margin of safety is immense with crude in this low band territory. So I think that all three are firing on excellent macros. They're both processing. Reliance just processes soft, and they are doing both hard and soft, which is more to the Indian palate, and that is doing extremely well. So as a disclosure, I think we are in it from much lower levels. So if you are getting in, then the risk, of course, is there that these stocks have gone 40-50% in the last 4 months. But I still think PSUs are, particularly oil and gas, this and GAIL are going to do very, very well.
Is it time to take some chips off the table in NSE, not NSE, NSE is not listed, but in, let's say, BSE, MCX, CDSL, some of these stocks have just gone really, it's been a linear move in them.
Well, Nikunj, we can argue that case that you can take some chips off, but I think the intermediaries, that is depositories, exchanges, insurance, like yesterday, SBI Life and HDFC Life hit a new high, and brokerages. As a disclosure, I am part of that process. I think they are here to stay for the next many, many years. And as you see, if you are aware that CAMS and CDSL will now see even the your insurance policies get dematerialized. And aside from the holding fees, there is also the transaction cost. So I still think these are very, very good businesses with a longer term view. In the short run, you are right, they may have played out, but I still think particularly insurance companies, the private ones, and brokerages, these are going to head much higher as this whole gamut of equity as an asset class and demats and so on, account openings become very, very key, with participation now reaching 17,000-18,000, which is, if you took it on a base, it is just 700 crores a day, which for a country like India is nothing. In the next 5 years, you could even see 5 times that size.
All right, Sanjiv, good to have you as always. Thanks so much for joining in. Let's bring